Welcome to this month's Chicago Housing Market Update. I'm Ann Rossley. If you have heard all the national news, a lot of stuff we see in social media, you're going to see we've got more properties on the market since 2013. There's so much. The market's contracting. There is so much out there that is just not Chicago. So, folks, listen to this. This is Downtown Chicago Housing Market Update. It's what's really going on. If you watch this regularly, you know that we talk about the downtown lakefront communities. That's South Loop up to Edgewater, along the lakefront and immediately west, which means West Loop, Bucktown, Wicker Park, Logan Square, Lincoln Square, et cetera, et cetera. So anyway, that's the main market that I work in. Most of my clients stay within this market. So let's just talk about what's going on. And let's talk first about houses. All right. The real story of Chicago right now, no inventory. The market is robust. Demand is there. And sales are down, yes, but it's not because the market's contracting. It's because there's nothing to sell. There are so many buyers out there that want to find things and they can't buy them. So let's look at the numbers and talk about what's going on. All right. So first of all, 47 homes closed in February of 2026. And you can see in this chart, it's up and down, up and down. That shows the seasonality of the market. You can see that in 2021, we had a high peak of homes closed. We had, I can't even read the numbers, it's so small, but it was about 350 in 1 month we had closed versus 47 in February. And remember, folks, this is the beginning of the spring market. This is when things are supposed to be picking up. Now, granted, that's more under contract than closed. Closed, of course, is the lagging indicator. But let's look at what went under contract, 55. So in all of the single family area of the lakefront communities, 55 homes went under contract in the month of February. And you can see that it was about 225 in 2022. In March. So what a significant difference. Why? We only have 104 homes for sale right now. Look at the line. That's where the 104 mark is. And you can see that every month, except for maybe the last 3, we've had more than 104 homes for sale. So it's just so, there's like nothing there. Again, 55 under contract, 104 for sale. What does that mean? It means we have no supply. We talk about monthly supply. If it's 5.5 months or more, 5.5 to 6, it's a stable market. If it's under 5.5, we call it a seller's market. If it's over, if they're like 12 months, a year's worth of inventory, well, folks, that would be a buyer's market. And you would have your pick of properties on the market. You'd see homes reducing their price. Right now, though, we're seeing prices increase because there's no inventory. People want to buy. So what happens? $1,550,000 is the median sales price in the market right now. If you look at what was going on in 2021, 5 years ago, we were just over $1 million. So we've seen almost a 50% increase in median home prices because of this continuous interest in buying with lack of inventory. Every month I bring you a bar chart. This time I'm not bringing you 12-month rolling. I'm only bringing you year to date, which is January, February 2026. So you can see that 81 homes closed in the 2 months. That's down 27% versus the year before that, 2 months. In other words, 2025 Jan, Feb, 111 closed. So again, it's the same story. We're down. Really interesting thing, you guys, is attached. And of course, you know, attached means condos, co-ops, townhomes, right? So during COVID, remember, people were fleeing the city. They wanted to be out in the suburbs. They wanted to be in California, Texas, Florida, South Carolina. Well, folks, that's where you're seeing the glut of properties on the market right now. Not so at condos in downtown Chicago. 516 closed in February. 18 went under contract. And that looks like it's up, but we only have 1,193 on the market. There were over 5,000 on the market in 2021. And now we only have less than 1,200. You can see with the line, it is so incredibly low. Only 1.4 months worth of homes on the market. And that's equating to almost 470,000 is the median sales price in the lakefront communities. 964 closed year to date. That's down almost 20% versus the same time in 2025. Again, no inventory. Well, Freddie Mac and interest rates are certainly a part of this. More and more people want to get out and buy homes because interest rates are under 6% right now, the lowest it's been in many years. If you bought your home a few years ago and your interest rate was like 6.657, 7.25, you may want to consider refinancing. They typically say if there's a half point difference, it makes sense financially to refinance. So check in with your lender, talk to our buddies over at Key Mortgage if you don't have somebody special in your life for your mortgage needs. But it could be a very good time. And then the one thing to keep in mind that they're talking about nationally, now I'm going back to national after I just poo-pooed it, but they're saying that affordability is increasing. And when I say they, I'm talking about all the pundits out there. Keeping Current Matters aggregates everybody's information, brings it together, is a really trusted source that I love to use when talking with my clients and understanding the market. But anyway, home price growth is moderated. You can see the big blip up there when everybody, was fleeing to the Sun Belt, buying, overpricing. They had that big run up in prices. And prices were outpacing growth in wages. And so this chart is showing that home price growth has moderated. Wages now are increasing faster than home prices. And that's important because that means more people are going to be able to afford homes. Again, this is nationally, is more and more challenging to buy in Chicago. One has to be very, very smart about it. And then this chart shows, I don't know, I'm going to bring it up here even bigger for you to look at, but this shows what happens to buyer demand in regards to interest rates. And when they decline, buyers want to buy. Hello, not a big surprise. Anyway, if you're buying in Chicago, you need to be very strategic about it. You need an agent who can help you navigate. And, most buyers, for the most part, are not just buying to buy. They're looking to buy what they want. They're willing to pay for it. If you're a seller, don't think that you can put a high price out there and anybody will buy your property. That's not the case. Buyers today are very savvy. They will buy at market rate, maybe a shade higher, but buyers are not going to overpay, outpacing the market. So anyway, that's it in a nutshell. That's what's happening in downtown Chicago. Remember, we're in March now. So this is typically the month where the most contracts are written in the lakefront communities. I'm sure it'll be good. People are going to be out there buying what's available. So I will see you next month with the latest update. And if you have any questions about buying in Chicago, please reach out. Thanks for watching.